Hey guys, I have a lot of things to say about the election, but I also want to mention that this afternoon the Federal Reserve is going to lower interest rates, maybe a quarter point, maybe half a point. Doesn't matter. They're going to lower rates a bit. It's just part of the rate lowering campaign they're on, so that'll be this afternoon. So I'm talking about it now. The decision will be out by the time you see this video, I imagine. I'm also going to tell you about the stock market trade that I'm thinking about making. It was going to be today, but it'll be too late by the time I'm done talking on this video. Maybe tomorrow on the trade I'm going to talk about in this video. So as I mentioned, the Federal Reserve is going to make a decision about interest rates this afternoon. And they'll lower rates a little bit, just as part of the process of bringing the rates down because they believe that inflation has come down so much. And it's all ironic because inflation will go a lot higher for a various number of reasons. One of which is the amount of money they're going to be creating pretty soon to cover over all of the operating deficit and debts that we have going on. Just for the carrying costs on the debts, we need to come with $1 trillion every year right now, and it's only growing from here. But about the election, I wanted to say that the polls, it shows you the polls don't know what they're talking about. All these polls for the last 3 elections now have been ridiculously off base. So that goes into talking about why spend all that time watching this on MSNBC or whenever, just people talking and talking. If Harris does this and Trump does that and this voting group in this little county here and there, and you waste hours and hours just watching this stuff and watching the polls and talking about the polls. And it's even in my book. I'm thinking, hang on a second. I tell you what you can do with all the time you're saving by not watching this stuff. And people telling you about their daughter's dance recital outcome that you don't really care about, and they're just talking to you and wasting your time. I have a whole section on that in that book. Think of all the time you spent watching what could happen in the election. And it was mostly all of it, or all of it. It was completely off base. You waste that time. Think of what you could have been doing in that time instead of that. But then Donald Trump got elected, and you saw the results of that. You saw the markets go up like gangbusters across the board. Besides precious metals, just about everything else was going through the roof. But even cryptocurrencies, because he's a pro-cryptocurrency president, so that's been a win in the sales of cryptocurrencies. But one thing I'd be concerned about coming up is the tariffs. As you know, the tariffs will probably be pretty significant. And what that is you go to buy a plastic swimming pool for your kid from Walmart. And then if there's a tariff on that, that means that you pay an extra amount of tax on that. So you pay more than you would because you're buying from a tariffed country. You're buying from China. So now your $10 swimming pool is $12. It's the American citizens that are going to be paying the tariffs. I'm not saying they're bad. They can be really useful in a lot of ways. I think that the main focus of any country right now should be to try to get most production in-house. Bring everything back. All this globalization has been great in a lot of ways. But there's something to be said for a country producing things. If America makes so many cars and sells them to everybody in the world, then America is growing in wealth. It makes the quality of life for American citizens better because they're from a more active and successful economy. And the thing about, I'm using China as an example. It could be tariffs against Canada, Mexico, anyone. But the main focus of the tariffs will be towards China. And China does not need America, but it's really helpful. But how much business does China do with America? The answer is $551 billion. Who's in second place? That would be Hong Kong with $276 billion. But Hong Kong is just a part of China. It's like saying Quebec or Hawaii. So I count that as part of China, as do they. And next would be Japan, $178 billion. Then Germany, $152 billion. South Korea, $150 billion. But I believe if you take all the countries in the Eurozone, that adds up to a lot more than the amount of trade between China and the United States. There's more trade between China and Europe. But in terms of individual country, the biggest country that trades with China is America. And I've long said, just like in Venezuela, the stock market is going to be driven up by increasing liquidity. When they make more money and there's more money going around chasing down houses and stocks and pieces of artwork and precious metals and base metals and general commodities like pork bellies and cotton, when there's more money going around doing that, it makes everything cost more. So stocks will continually get pushed higher as long as the liquidity expands until we have an event. And these things can happen when no one's expecting it. And right now, There is so much optimism. And I always tell you guys that investor sentiment is a contrarian indicator. Everybody, to a man, is talking about how much higher the stock market will now go. That's what gives me cause for concern. And as I tell you, I'm not saying the stock market will not go 10, 20,000% higher. I'm saying the higher it goes, the further it will fall back when it comes back down the elevator. I don't want to be sitting there active in a lot of these high-flying stocks at a time when things do turn around, which may be tomorrow, maybe 17 years from now. But it'll happen. And I want to be invested in real money, things like precious metals, which is money, things that have value, actual things. And I had a question yesterday about, what do you think about Chevron? You like that kind of stock? And I said, yes, I own it personally in my own portfolio. I believe everyone should own some oil and natural gas stocks, energy production stocks, always. And as subscribers to the Peter Leeds newsletter know, my portfolio personally, we're looking at about, I think 25-30% of my investments are related to oil and energy. And almost all of the rest is all related to gold mining, silver mining, physical precious metals, and other investments that will benefit as precious metals prices rise. But I'm not predicting a date for when the market will crash, but I am telling you that it's almost like there's a bubble, and you're asking, how big is the bubble going to get? I have no idea. It's just inflating right now. It's much too big. It will eventually pop. All bubbles pop. Right now, it's really extreme. Could it get more extreme? Yeah, just like it did in the dot-com bubble. Sure, it can just keep on expanding until it doesn't. And that's when everything goes back to, I say reality, but it'll actually go well past reality. It'll overcorrect like a pendulum, as I always tell you. Right now, I watch things personally like when there's too much greed, not enough fear, way too much complacency, sort of like now, tremendous overvaluations, as Warren Buffett would tell you right now, or in some of these articles I've mentioned before about the bizarrely overvalued stock market. And if the stock market is bizarrely overvalued and it goes up another 5%, people might say, hey, you were wrong about the bizarrely overvalued stock market. It didn't crash like you warned about. And just to be clear, that wasn't my article I'm talking about. I'm referencing an article I showed you guys to sort of make the argument that I'm trying to present here. You're not wrong to be early. Although being early sometimes can be wrong if you're talking about being a trader. But if you know that a train's going to derail, it doesn't matter if you get off the train on the first stop or the 10th stop, as long as you get off the train before it derails. And to address all this economic strength that everybody's touting, the fact that you have to keep saying it means that it's probably not true. The fact is, even you, look in your own personal situation. Look at it. You could live off your credit card. You could spend everything on a credit card that's just bottomless and just keep putting everything on that credit card all the way to the moon. You could say, if I have something I want to buy, I just put it on the credit card. And all of a sudden, you feel pretty wealthy. You feel like you got everything under control. And you're just increasing an amount of debt, which does become problematic. It grows to a point where we're wasting money. So as I tell you that we spend $1 trillion a year just to pay off the carrying costs on the debts. And you say, well, why would we have to pay debts at all? The problem is that a lot of the debt, the majority of it, is owed to American citizens. And also, if we are going to default, we're not going to say pay all the trillions we owe to China or to Japan. Not trillions anymore, but billions. We don't pay those billions back. Then all of a sudden, the whole world sees, wait a minute, they've defaulted on the currency and the value of the dollar will just collapse. Interest rates will spike. Instantly, everything will get more expensive, carrying costs on your auto loan, your mortgage, your credit card. That's why you don't want to default. And I know that the argument's that, well, the United States will never default because we have the printing press. We'll just print as much money as we need. That's what I'm worried about. It's being done before, we can see what's happened in other times. When you just create new money, you create more of anything, it all becomes worth less. Each individual piece of it is worth less because there's more of it. If there's $1,000, the dollars are very valuable. If there's $10 billion, each dollar is not as valuable as if there's only 1,000. Even with Bitcoin, the value is in the scarcity. There's only so many Bitcoin available, and that's why it's locked into something real. Scarcity, that's going to hold up its value. Unlike something that's unlimited, which is most of the altcoins, they could just be created ad nauseum. So we've got this complacency. We've got this economy living off of debt. There's a major detachment between the stock market and the economy where it used to be very close, where the stock market's made up of a bunch of companies in the economy, and when they do well, because the economy is doing well, the stock market does well, because the stocks of those companies do well. Right now, that's completely unrelated. How the stock market does, it's manipulated. It's unrelated to how the underlying companies are doing. That's why when the economy is suffering so much, the stock market keeps on going higher. Everybody is chasing small gains here and there, and they don't want to miss out on anything. That's why they're all getting into this stampede at the same time. But that detachment, the further it gets, I've been talking about it for a long time, and it keeps on getting bigger every time I talk to you about it. The bigger that gets, it's a sign of concern for an economy, which is the same thing for things like, say, income inequality, which you see as that gets greater and greater. The chasm between different income brackets grows and grows. The detachment between stocks and the economy expands and expands. All of this is a sign of concern. The way I look at it, I watch this stuff happening where people all of a sudden are unable to pay their auto loans. They're seeing record default levels. You watch this stuff and you realize, and you feel it too. This economy is not strong, and they can tell you it and tell you it and tell you it, but they protest too much. And I've been hearing talk about some of the stuff I've been reading and listening to lately about that being kind of like a suckers rally. And I'm not saying that it was a suckers rally. I'm saying that that's the talk, and I could understand some of the arguments in that regard. It's not technically a suckers rally. I don't feel it's that, but I believe a lot of people saw the commotion, the massive move, and they jumped in, and they might regret it later. Maybe they won't. Maybe I'm completely off base here. But like I said, I'm trying to get off a train that I know is going to derail. And you don't need to try and get to the furthest stop before it derails. You can just get off of the train now and then go about looking for opportunities now on the ground while the train careens down the tracks to a point that I believe if you watch this channel, if you understand the economy as it clearly is being demonstrated, you understand that this train has got one destination. You don't want to be on the train at that time. But the thing that makes it worse with a suckers rally, if it is, or if it's just a stampede, is that if you're sitting in a public place, people walking by, and all of a sudden everyone starts running in one direction, one way, if a lot of people are running in one direction, most people will get up and run with them, even before they know what's going on. And by the way, I forgot to mention, if you want a copy of that Upthinking book, hardcover, well, you can get a digital or audio copy, be listening to it today. Just go to peterleeds.com. Or if you want the hardcover version, you not only get the audio and the digital versions, but I will mail you that book and sign it to you anywhere in the world at my cost. For the shipping. I'll pay the shipping. You're not getting the book free. But this big stock market rally you're seeing is because of, obviously, Trump getting elected will have certain impacts on various businesses. It'll be better for some, like cryptocurrencies, oil companies. It'll be worse for others, like solar power companies. And there's a lot of talk about how if there's a lot less green energy, fewer solar panels being made, there'll be less demand for silver. And I always say, don't worry about gold and don't worry about silver, ever. Especially silver, and especially right now. If the entire world came together and said, no more solar power anywhere in the world at all, and that entire demand disappeared, there will still be millions of ounces of silver every year needed or demanded than the amount of silver being produced. And as I said in a recent video, even in a heat wave, the price of sweaters will increase if there's more demand than supply. And the one thing the election did is that it really held everyone's focus. And it held my own focus too. I don't blame anyone for focusing on this election. It was very pivotal. But while you're watching that, what are you not watching? And that's the thing. A lot of people are forgetting. Maybe they're not forgetting, but they're not paying the same attention to it, or they're tired of the same event going on and on. They're just not paying the right kinds of attention. The war, the hot war in Middle East is heating up at a pretty quick pace right now. There's bombs going off all over the place. And as I said, in the special Peter Leeds Insider exclusive email I sent out the other day, what I said was, what a moment in time. And I was talking about the presidential election, which that was written the day before the election, so this is now after. And then I said, secondly, there's been another statement by Iran that they're going to launch an unimaginable strike against Israel. And I went on to say that the real significance of this highly likely event will be all about Israel's response to it. I believe Iran when they say that they're going to attack Israel. They say they are, so they're either going to then not attack, or they say they are and they're going to attack, which I imagine they will. And I believe that you also imagine that when they do attack Israel again, Israel will hit them back with such a tremendous counterstrike that it will be incredibly pivotal to you. There's three main targets that they might hit if they're going to escalate or rise on the escalation ladder. We're talking about regime change. I mean, they're targeting enemies in bedrooms. They know where these guys are. It wouldn't be too hard to know exactly what room the Ayatollah is in at any point in time, especially with the technologies that Israel has. And if they don't hit or try to strike for regime change, then they might hit the nuclear facilities. And if they don't do that, they might hit the oil production facilities or the refineries, or any combination of the three. What I said was, in any of these three cases mentioned, oil prices will spike. And this is fun here. I went on to say, and Donald Trump may win the presidency. And that alone will increase the chances of Israel making a massive military statement. They may do that even with the Harris presidency. But the reason I said that about Donald Trump is because he's very friendly to Israel, militarily for sure. So maybe they'd feel like they have a closer, powerful ally in Donald Trump and sort of do some things they might not have done under a different presidency. But the reason I want to read you this thing I wrote for the insiders is because in the last paragraph right here I'm going to tell you about. Because it still applies to how I feel right now, even after the election. But what I had said was, the next few weeks will be a time to watch and observe these two significant events, and then react based on what happened in each of them. And again, like I said in the Upthinking book, you don't need to know who's going to win the presidency. Even if you try not to find out, you're going to find out. So don't even obsess about it. Don't watch the news about polling conversations and focus on it so much. Just wait and see what happens and then react to it. Same thing with Iran's strike on Israel and therefore the tremendous Israeli counter-strike. It's all about that counter-strike. What they do, how powerfully they do it, will change so many things. That's why I say, like I mentioned earlier when the gentleman asked me about Chevron, always own some oil and gas companies. Just because of the way they can spike in any kind of tremendous military event. Instantly, prices of oil could go up $20 a barrel. You don't want to be chasing that move. You want to be positioned ahead of time. And then if it happens, you're in a good place. In my opinion, this is not personalized trading advice for you. I don't know anything. I'm wrong 100% of the time. And just before I tell you about the stock trade I'm going to make probably tomorrow, and I'll tell you more details about it in the Peter Leeds newsletter, of course, but I will tell you on this video for free. Before I do that, I want to mention that tax loss selling season has begun. This is especially common in the world that I dwell in, the world of penny stocks, stocks $5 and less per share, but I'm talking about the ones that I really focus on. $2 and less per share is what my bread and butter is. They get highly affected by tax loss selling, especially because they're thinly traded in many cases. What happens is that if there's a stock that dropped over the year in value, investors can sell those shares, take the loss on paper, or realize that loss from paper to reality, and use that loss to offset other gains they might have made with other stocks. So what happens is that you have a whole bunch of thinly traded stocks that get artificially sold even harder, and the prices go to even more undervalued levels. So if you got your eye on any of these stocks that we're looking at, these thinly traded companies that are getting driven lower, the time to start looking for bargains and tax loss selling season is right now. Now, you waited long enough. My trade tomorrow will be lightening my load, selling some more gold mining companies. And I know you say, but don't you think gold prices are going to go higher? Yeah, they're going to go a lot higher. And these stocks are going to do really well. Some of them, though, in the short-term time frame, may drop in value from time to time. And we've had a really good run, made tremendous profits. I don't want to just leave all the profits on the table. I want to take some of the profits. And only because I have such an array of gold mining companies and investments, it makes sense for me to lighten the load in some of them to a certain degree right now. And as you saw yesterday, Donald Trump got elected. Prices of gold went down something like $40 or $80 an ounce. And again, I say don't even worry about gold, and even today. Actually, we'll take a look at it right now. Gold's up $28 an ounce. Silver's up almost 2%. Cryptocurrencies are flat. Oil's flat. The markets are flat. Except Nasdaq's up 1.37%. Pretty good. but everyone is waiting to see what the Fed does, even though everybody already knows, including you and I, we already know pretty much what they're going to do. Consider becoming a Peter Leeds Insider, peterleeds.com/insiders. Please click like so that we can share these videos to more people, and subscribe to this channel, and then learn more about the Peter Leeds newsletter. I imagine that's a little bit of a task list for you to concentrate on, just between you and I. Don't do anything if you don't want to.